Hey friends, this is Dave. Thanks for watching. Every few weeks, I like to do a pretty casual video, minimal script, minimal editing, where I just talk about the trades and investments I've made over the past couple weeks, how I'm thinking about the markets over the past few weeks and moving forward. And I really just want to hear about what you've been doing over the past few weeks, what investments you've made, what trades you've made. I'm lucky that we have some pretty smart people who often watch the videos and chime in. So always great to get new ideas from you guys. And just let me know down in the comments, what have you invested in or sold or whatever over the past few weeks. Always love to hear it. Before we dive into that, though, please do hit like and subscribe. It'll help a lot with the YouTube algorithm, which has not been very kind to us over the past couple weeks, so any help is always appreciated. We also have a Discord link down below if you're interested in joining the Discord server. Now let's dive into what I've done over the past couple weeks. So first off, to give you the backstory on this trade, I've owned Wynn Resorts. They're a casino company since before the pandemic, and obviously once the pandemic hit, they got absolutely smashed. They did recover, then drop back down. They have some exposure to China. They have some properties in Macau where they do a lot of business and run a casino there. So there's a lot of concerns on that front, and basically, I've never got back into the green on this company, which is a little disappointing, because I think in normal times they're easily worth $100 a share, which is around what I bought it at, and it's now in the 60s. So what I've been doing is selling covered calls at the price I acquired the company, which is $100 a share. What this means is if it goes to 100 or above, someone can buy those shares from me for $100 a share. So let's say it jumps all the way up to $120 a share. I have to sell it to this person on the other end of the trade at $100 a share. But on the other side of things, I get to make some money for being willing to make this trade. So what I did was, for about a month or two out, I sold 2 cover calls on my Wynn shares at $100, and for this I received $80 per contract. That's 2 contracts, so that's $160 American. Now this expired worthless because Wynn did not hit $100 by the expiration date, meaning I keep my shares and I keep the $160 that he paid me to have this option. Now, I've been doing this basically over and over and over again since I've been at a loss on this company as a way to generate income on this holding that I'm stuck holding at a loss. So while it's frustrating that I've had this company at a loss for about 2 years, I mean, who can see a pandemic coming? Pretty much no one. This is a way that I've just continually generated income off of it, and once I eventually get back to 100, eventually it probably will get called away from me, but I will have made a significant amount of money over the time holding it. When I really do just kind of want to get out of it now, I prefer investing in other areas as opposed to the casino industry. So I've done this probably, I would say, easily 12 plus times now, and it's always expired worthless, meaning I've probably made a good $1,000 to $2,000 just selling these covered calls on this company I own. So not bad, really. A decent way to turn lemons into lemonade if you're holding something at a loss. Now, unfortunately, this doesn't always work. This is one that I have at a larger loss, PayPal. So I think if you're not aware, PayPal went through a massive crash recently. They lost eBay as kind of a big customer, and they just had a really tough time. So my PayPal is unfortunately way down, and it's so far down that I can't really get a decent premium to sell a covered call at my cost basis, because it's just so far below my cost basis that no one's willing to pay for that. So unfortunately on this one, I'm just kind of holding at a loss until it recovers, just using it to show you that while this strategy can work very well and generate income, if you're holding something that has gone way down, you may be out of luck unless you pick a much lower price than you originally paid for the company, in which case you risk having it taken away from you at a loss. So probably going to try and write another covered call on Wynn, and there's a few other ones like this where if I get a little higher up, I'll be writing more covered calls on them as well to try and make some income. Now, I've been buying Rocket Lab fairly regularly. Whenever there's a dip, I've been trying to accumulate shares. I think 10,000 shares is kind of the number I'd like to be at. So we see today I bought some at $4.99. I bought some at $5.45 a little while ago, and then I bought some more shares at $5.50 as well. So just slowly accumulating shares, not massive buys, but just trying to increase my share count. And if I do see it drop into the mid fours or even the threes, I don't really see that happening again. But if it does drop into the mid threes, I'll just do a really big buy. And if it even in the mid fours, I might do a decent sized buy to try and get my share count up to that 10,000 share number, which is kind of what I've decided I'm comfortable with holding Rocket Lab at. We can see on a 5-day Rocket Lab chart, just hopping out where I bought it was obviously after this big drop with the purchase today. It's gone down really right after the launch. Actually, I think this drop happened in the after hours before the launch. Launch was a complete success, so I'm not exactly too sure why we had this sudden big drop. I know recently we've had some insider selling, but I think that was a few weeks ago. So let me know down in the comments if you have any ideas as to why we had this specific big drop in Rocket Lab. It didn't really correspond with the CPI data we received or any other inflation-related data that I saw. So I'm pretty curious about this one. Zooming out just to my full account over the past 7 days, we were doing well for a while there, and CPI data came out hotter than expected. Bad news for inflation, and we've had a bit of a dip here. We recovered a little bit. My Tesla has been holding pretty well, actually better than a lot of the overall markets, and we're kind of dipping again now. But overall, I guess I'm still up over the past 7 days, so that's always nice. Talking about that CPI data, we just have a headline here. U.S. inflation tops forecast, cementing odds of big Fed hike. So one of the reasons why the markets dropped when this data was released is not only because it's bad in that inflation is higher than we expected, it also means the Fed is going to probably do a larger rate hike than we expected. So people were previously saying probably 75 or 50 basis point rate hike. Now we're probably looking at 75 or 100 rate hike. Probably still 75. I think the odds are in favor of that, but definitely not 50 now, and there's always an outside chance they'll even go up to 100. So we're really starting to see interest rates rise quite substantially nowadays, and it is hitting growth stocks. This is the day after that CPI data was released. U.S. stock market wiped out $1.6 trillion in 1 day of value. All the big companies getting hit. Apple 6%-ish, Google a little under 6%, Amazon 7%. Tesla actually held up a little bit better. It was only negative 4%, which is still bad, but not even as bad as some of these names, which you usually consider to be more stable than Tesla or even Rocket Lab, because I think Rocket Lab held up decently well, all things considered. By the way, we do have a new SPAC in the space industry. Just wanted to briefly mention this came out today. Lunar tech company Intuitive Machines is going to go public via SPAC at a valuation of around $1 billion. Personally, I'm not going to invest in this, not really interested in almost any SPAC right now in the first year that they go public. I've invested soon after the IPO in a few companies. It's never gone well. From what I've seen, you seem to very often get a better price if you wait a while. These things, for whatever reason, they got a lot of hype around the go public date. They jump up and then they seem to drop for the next year. But even without that, I think I'd probably stick with Rocket Lab as opposed to looking at Intuitive Machines. That's just me personally, although I might dive into it in greater detail at a later date. And then I don't talk too much about my Tesla positions, but it is an extremely large position in my portfolio, and I'm really excited about what Q3 and Q4 is going to hold for the company. I think we're actually going to have an extremely, extremely strong third quarter and fourth quarter results. So we're looking into October and then obviously end of the year when we'll get those numbers. There's been some interesting news out of Shanghai. They increased their production capabilities. I think we're going to see a massive record for how many vehicles Tesla produced. the margins should be pretty good, although the new factories at Berlin and Austin still ramping up or still be weighing down on the margins. So there's a little bit of a question mark there as to how much those are going to weigh down the margins. But based on, but just the cars coming from their more established factories in Shanghai and Fremont, I expect those margins to be as strong as they've ever been and the numbers to look really good. So usually as long as Tesla's above 300, what used to be $900 a share, I'm pretty happy. When it drops down to 700-ish these days, I look at maybe adding more. So I actually have several different accounts with several different positions here. Cost basis around 63. This is actually incorrect because that was when I moved to Interactive Brokers. The true cost basis is actually much lower in this position. Then I have some other cost basis around 243 and 237 that I added more recently. We're sitting around 300, maybe a little less, so I'm up on all of these. Also, these $300 puts I have. So as long as Tesla is above $300, I'll just keep all the money I receive for these and I won't have to buy the stock. I received $42,000 and $25,000 for these two puts going out to June of next year and then January of the year after. I find it extremely unlikely that I'll be put this in January of 2024. Have been a lot of time for them to continue to scale their manufacturing. The vehicle numbers will be so high. I really don't see myself getting put this. So that's basically just almost $26,000 for free, which I have to be pretty happy about. And then this one, there's a minor chance I do get put it, which if it happens, I won't be too bad. I'd probably just roll it out to a later date, if anything. But there's a good chance I just keep the full $42,000 and I don't have to buy the stock as well. So pretty happy about how Tesla's performing lately and excited to see what the next 2 quarters and the end of the year holds for the company. That's it for me. Not a lot of moves right now. I find I like to trade more in bull markets than bear markets, so it's been a bit slow over the past year, which is unfortunate because that's when I started the channel, whereas previously I was doing a lot more moves and it was a lot more fun, so I could have shared that stuff with you. But right now, the market is very uncertain, so I'm a little uncomfortable making some of the types of trades I used to make. Let me know, though, what trades you've made in the past week. I'm definitely interested in hearing more ideas. So that's it for the past week. I had one call expire. I'll look to write it again, perhaps wait to see if Win will rise a little bit more so I can get a bit of a better premium. Premiums have been getting a bit weak lately as we've seen the price fall. I am looking at selling covered calls on my Shopify, and if PayPal ever gets to the point where I can get a decent premium, I'd look at that as well. And exciting times for Rocket Lab. I've been adding more shares. If we do get to 4.5 or below, I'll likely add more as I am in accumulation mode on that company right now. How are you feeling about the economy? Are you shocked by this inflation data? I have to admit it did catch me off guard. I wasn't expecting it to come in so hot. I was starting to think we really did have this under control, but clearly not. Disappointing to see, but at the same time, it allows me to continue accumulating more shares in Rocket Lab. So I'm always conflicted on this because when the markets go down, I'm sad for my current holdings going down, but I'm also happy because it gives me the chance to add Rocket Lab at a cheaper price. So, you know, there's two sides of the same coin there. When do you think we're going to start seeing markets recover, and what have you been doing over the past week? I'll look for your answers in the comments below and see you next time. Bye.